Hi everybody, hope you're all well. And we'll make a start then. So welcome to our Construction Matters webinar. I'm Chloe and I head up our marketing at 360. I'm joined by my colleagues Andrew Jordan and Sean Maloney, who are going to be hosting the webinar for us. If we could ask you to keep on mute, I have muted everybody, but you see, I can see everybody's muted, so that's fine. If you've got any questions, drop them in the chat box. I'll be keeping an eye on the chat box and I will ask the questions on your behalf to Andrew and Sean. I'll now pass you over to Andrew and Sean to introduce themselves. So Sean, did you want to go first? Oh.
Hello, sorry, good afternoon everyone. I think Chloe just muted me. I don't know if
Sorry.
it's good afternoon. Yeah, I'm Sean Maloney. I'm one of the partners at 360 Accountants. I'll be doing the bit on the reverse charge. I'll look after a number of clients in the property sector and the construction sector, as well as a general portfolio. So I'm hopefully going to give you a little bit of guidance on what the reverse charge is all about and a couple of hints and tips of some of the key items. Over to you, Andrew.
Thanks, Sean. So yeah, my name's Andrew Jordan. I head up the Research and Development Claims Department at 360, as well as looking after a corporate portfolio. So once Sean's talked you through the reverse charge and how all that's going to work, I'll quickly talk to you about, for 5 to 10 minutes, so about the research and development claims within the construction industry. And I thought that might be of interest to a lot of people here. So yeah, back over to you, Sean.
Thank you both. I'll just share my screen so you can all see. Bear with me 1 second. Okay, over to you, Sean.
Well, thanks, Chloe, and thanks everyone. Yeah, so I'm just going to run through a little bit on the reverse charge regime that's coming in. A couple of things on the key actions that should have been undertaken, or you should be undertaking. A little bit on who or what is affected, how to deal with it, and just a couple of key items to look at, particularly in terms of some of the dealing with the charge and some of the areas where there's a little bit of cash flow impact. So you just roll on to the next slide, please, Chloe. That'll be great. As I said previously, if anyone's got any questions, if you put it in the chat, we'll endeavour to get through them. If there's a few more, if it's a detailed question, then it's something probably we'll pick up after the webinar. But anyway, I'll go through the slides and we'll see where we get to. So as you probably mostly aware, if you're in the sector, this is something that was muted back in 2019. It was supposed to officially start in the 1st of October 2019, but was put back, I think, principally due to Brexit. And even despite that, and then with the onset of COVID, it seems to have risen its head again. Whether it's because people think COVID's not going to change things, or whether Brexit is all but done, which is obviously a little bit of a misunderstatement. We'll see. But anyway, so the reverse charge is coming into effect from the 1st of March this year, and it's all about the way VAT is accounted for in certain suppliers in your sector. So mainly, as you see, the key actions that have been kind of identified by HMRC prior to this is, number one is whether check whether this affects either your sales, your purchases, or both. Talk to customers and suppliers around the changes if it's going to affect you. Ensure that you've got any software or accounting systems that are updated to deal with this. A lot of the systems previously have been updated, particularly when it was muted to come in 1st of October 2019. So hopefully everybody's working on systems that have got a solution to this. If not, again, you can message us directly and we can always have a talk about systems that are currently dealing with this. And we use Xero, so I know Xero's definitely got a solution for it. And the fourth bit is really to consider the cash flow impact. Depending on how you interact with your business, there are some advantages and disadvantages in terms of the cash flow impacts of the reverse charge. So then if we move on to the next slide, please, Chloe. We'll talk about who and what. So who? So this applies to everybody throughout the construction sector. If you're a supplier of services or you've got customers within the sector, and a couple of key distinctions: they've got to be registered for VAT, they've got to be in the UK, and the services and generally have to be reported under the CIS regime. As to what, I guess this is one of the trickiest bits of it, because there are some nuances in it, but generally it's services which are supplied at standard or reduced rates. If it's zero rated, then it's not within the scheme. And they're normally reported under the CIS regime. So basically, if you're registered, suffer CIS, deal with any suppliers under the scheme, and you've got a specified service, then you're going to be within the reverse charge regime. And it's applied to the whole invoice, so no distinction between materials and labour, which is different to CIS. Obviously, there's different charges on the CIS if it's the split between materials and labour, but the VAT element of it is incorporated in the whole thing. And a couple of points: if you're doing split services in terms of different rates and different services, if one of the services is in, then the whole invoice is in the reverse charge. And if in doubt, then you are if in doubt the service is captured, then if it's above and it's in with the VAT and your CIS, then generally it's going to be under the reverse charge. Mainly because it's all about end user, intermediate supplier. End user really is about if it's the end of the line. So if they're in a subcontract situation, then this is going to be the situation where the reverse charge sort of regime comes into play, because there will be a VAT element that you don't charge where previously you would do. It's all about moving up the VAT to the end of the chain. So it's the end user ultimately. If you're supplying the end user, this is where the VAT implications come into play. There are some exclusions within the sector. Zero rated, as I said, services are not included. If you're dealing with anybody non-VAT registered, again, that's not included. And then the selected services, which are included. Now, a lot of these services, whether included or not, there's some HMRC guidance on whether they fall within that scheme. Just click on to the next slide, Chloe, please. Yeah, there is some HMRC guidance which gives you details of whether the service that you're operating is in or whether it's out. And I think further on into the slides, there's a couple of links that you can get to, or when Chloe sends these out, there's a couple of links that takes you direct to the HMRC site, which generally kind of gives you an idea of whether the service you're performing is in the VAT, is within the construction sector under the CIS regime or not. So then moving on to how to deal with it. So the VAT accounting side of it. So the customer receiving the service has to account for the VAT instead of the supplier, which means the supplier will not charge VAT on its invoice. The customer, again, can only reclaim the VAT. So again, as I said earlier, it basically is moving up the chain. So it's all about the end user that suffers the VAT. As you can see, that's where it goes. And as I've said, software options have already been updated for this. And if you don't have a software solution that deals with it, then you need to have a look at this immediately, really. As I said before, general software such as QuickBooks, Sage and Xero, they have definitely got solutions. as there was looking as due to the earlier implementation in 1st of October last year, 2019, sorry, it was already being brought in, so there was already moves to get software sorted. So if you're a supplier of the service, that's no longer charged unless it's a direct relationship with the end user, the customer. And if this is the case, then there might be a cash flow issue, because previously, if you was dealing with suppliers, customers where you were charging VAT, clearly you get the VAT and then you have to pay it 3 months later. If there's a removal of the VAT, it could mean that you're then going to be coming to a situation where you're getting refunds constantly rather than making VAT payments out. In that sort of situation, the question is whether you need to look at changing the way you would do your VAT, which would be moving to a monthly basis rather than a quarterly, so that you can get the refunds a lot quicker than you would do on a quarterly basis. So there are some recommended practices which have kind of been floated out by HMRC. Number one is to check the status of the customer, basically ensure whether they're the direct supply or not. Secondly, considering adding to your terms and conditions about the assumption of the end user status, particularly if you're dealing with the client directly, so that you place the responsibility of the customer. Place the responsibility on the customer to make sure that whatever the status they're telling you, if they're telling you they're not the directs, so the end user, then it would fall back on them if there was an issue with it. Thirdly, ensure the VAT and registration is in place before the reverse charge is applied. And as you see on there, I'll put a link to where you can check somebody's VAT number to make sure if they've got a VAT number and whether it's legitimate. And if you're dealing with people under the CIS regime, you clearly you're able to follow whether they're registered on that or not. So as you see, as I said earlier, the service included. There's several examples that HMRC have got in their guidance. Again, there's a couple of links for the services that are included and the services that are excluded, which I think if Chloe can, Chloe, you normally send the slides out after.
Yeah, I'll send it out, yeah.
So again, you'll be able to see where HMRC believe your services lie, whether they're in or they're out. Again, so a couple of the nuances now. Pre-existing contracts, if it's the contract's in place prior to the 1st of March, before it starts, then it's all about how and when you are invoicing your customer. If the work has been done prior to the 1st of March, then it would fall within the old regime, which would be normal accounting. If you've done the work and invoiced it after the 1st of March, then it falls within the new reverse charge. So you need to have a look at that to make sure your contract, or where your contract dates and where you place the time of supply, i.e. when you're doing the work, when you're invoicing it, where it falls. So as you'll see, HMRC will normally, if you've agreed a contract and it's set in stone, will normally allow you to keep to the terms that you set out before the reverse charge came in place. And as you'll see, there's an exception to this. If there's a change where the end user status changes, which for example, if it goes from you're not dealing with them direct to them dealing direct, then you can amend the treatment of the invoice. Couple of suggestions from HMRC about wording, any contract wording. So as you'll see for the VAT treatment of supplies, there's some wording there which they're suggesting should be in place in any of your contracts, which is under the, well, you don't need me to read that out, you can all read, hopefully. And again, for suggested amendments to contracts for end users, if you're dealing with direct people, then again, there's some a line that they're suggesting is added to your terms and conditions, which again is something to look at over and above the VAT treatment. So then coming on to the VAT returns, again, a lot of the solutions, the software solutions, should have the relevant places for you to enter these details. Again, if anyone's struggling to find how to do this or what to do this, then you need to contact us directly. As we've, as I said, we've worked with Xero and with Sage, so we should be able to steer in the right direction. But just as a refresher, if it's a sale under the reverse charge regime, then you only enter the sale. The net sale only goes in on the boxes. So if you're not dealing with the end user, then you wouldn't include the VAT element of it. You would just show the net sales in box 6, which is the net sales on the VAT return. But if you are suffering suppliers under the reverse charge regime, then you enter the VAT into box 1 and box 4. So it's a nil effect, but you've still got to show it as an output VAT, which is the box 1, and an input VAT, which is the box 4. But only put the cost in box 7, which is the net purchases. Don't put that in don't put the corresponding sale in box 6. Otherwise, it'll be added onto your sales, and HMRC will be wondering why your turnover in your accounts don't match your VAT returns. Again, as I've said, the software packages have got solutions, which should mean there's a tax code which should allow the automation of the process. Again, if anyone's having any issues or struggling to find how it doesn't work or haven't got a solution, then contact us direct. And then in terms of actual physical invoices, again, if you're raising invoices through your software solutions, these should have some solutions on it. And as you'll see, invoices raised under the reverse charge regime need to identify if they are under this scheme. It needs to identify the work, not necessarily the VAT. It should include the narrative, the reverse charge applies. Normally, domestic reverse charge applies is the standard wording that should be used. Still need to state the value of the VAT that applies under the reverse charge and it's applicable. If this can't be done by the software, and then wording on the invoice should state that, as you can see, VAT is being accounted for by the customer at standard or reduced rate of VAT based on the VAT exclusive selling price of reverse charge goods of services. As I mentioned before, in terms of whether it falls within the regime, it's all about the tax point, the date that the transaction takes place. And if it falls before the 1st of March, then it goes into the old regime. After the 1st of March, it falls within the reverse charge scheme. So then a couple of things are just about some the VAT schemes. If you're under the cash accounting scheme, i.e. that's you pay your VAT out when your money comes in, or you reclaim your VAT when you pay it out. Well, anything under and that falls within the reverse charge doesn't go within the cash accounting scheme. You can't use it for that. So if you've got invoices that fall within that, you can't use it in there. So again, you maybe need to look at the cash advantages and disadvantages of using the cash accounting scheme if you've got a significant amount of your services within the reverse charge or your expenses within the reverse charge. And then the flat rate scheme, again, you need to look at this as well, because any suppliers within the VAT, the flat rate scheme, any sales you're doing is not included in that charge. So it can be a disadvantage to use the flat rate scheme, whereas previously you can get an advantage if you are charging your customer the normal rate of VAT. but you're only paying VAT over to HMRC on the low rates, depending where you are on the percentage under the flat rate scheme. Both of those schemes you need to have a look at going on traditional methods and see how the cash flow advantage or disadvantage applies. But again, we can help people to look at the differences between the two. Normally, identifying the VAT treatment can be answered by 5 questions. So ask the first 5 questions. Are you supplying a service under the SIS scope? If it's no, then its normal rules apply. If it's yes, you move on to the next one. Is the VAT rate standard or reduced? Again, if the answer is no, then normal rules apply because it would be 0 rating outside of the scheme. Yes, next question. Is the customer VAT registered? Well, no, then there'll be no. Then again, normal rules. Is it a CS report? No, normal rules. Is the customer the end user? Yes, normal rules apply. No, then it falls within the reverse charge scheme. Now there is one thing in terms of if you're providing services that come under a couple of, not just one service, but services to do 2 different schemes. If the amount that falls within the reverse charge is less than 5%, then you disregard the reverse charge scheme. So there's there's an example on there where there's a plumber that's doing a job that falls both within the normal scheme and within the reverse charge. So you can see from the example that if the net of that work that would normally fall within the reverse charge is below 5%, then you disregard it and you wouldn't use the normal scheme. But if the work that does fall within the reverse charge is more than 5% of the total invoice, then you have to apply the reverse charge to the full scheme. The second example there is about mixed sales invoices. So if you've got something that is both 0 rated and standard rated, again, you've got to look at how that falls within the script, within the scheme. Sorry, I'm just reading that. Yeah, again, you've got to see how that falls, because under this normal scheme, if there's a part that is 0 rated, well, it doesn't fall within the scheme. And if you've got a standard rate, you would have just applied the normal standard rate, and so you would use the normal regime rather than the reverse charge. Next slide, please. Next slide, please, Chloe. So then the next example under the slightly nuances on the screen is the work on new dwellings. As you can see, the example there is based on a carpet fitter, where he's got a couple of different places of supply. You've got one for labour and one for the carpets, and the work that is done comes within the reverse charge rules. Although the labour is 0 rated on the building work on a new dwelling, but the charge of the carpet is subject to 20% because carpets are not within that. You would deal with it under the normal VAT rules because it's the zero rate bit. So you would disregard the reverse charge and just use the normal VAT rules. And then the other example in terms of the single charge is if you don't split out the labour and the materials on that side of it, and it's just a supply and fit charge, again, you would use the normal VAT rules. Can you just go back one, please? Yeah, so in conclusion, there are a couple of areas where the reverse charge will not apply, and that's goods supplied on hire without labour, professional firms such as surveyors and architects, and employment, businesses employing staff within the scheme. That's, yeah, next slide please, Chloe. And again, with most things that have been brought in recently by HMRC, there are some variables within there. You know, everything is not black and white. A lot of these schemes are open to interpretation of how they fall within the scheme or how the service are. So there is some HMRC and government guidance, which again is built into the link, which should help with some of the, if you've got any areas you're not quite sure about.
Okay, thank you, Sean. Andrew, over to you.
Yeah, thanks, Sean. It was really interesting, that. I mean, especially about the point regarding checking for the VAT numbers at HMRC. I suppose that's a really simple but important point, isn't it? Because I'm right in saying that if you don't check the VAT number and it turns out that the customer isn't VAT registered, HMRC will assess the liability on you as the invoicing supplier for that potential lost VAT.
Yeah, that's right, Andrew. Yeah, it is. Yeah, I mean, what HMRC have also said that I didn't point out in the slides is that because of the introduction of the scheme, they will take a soft approach to anything that's not quite right. So for the first 6 months, it would probably just be slaps on the wrist or some advice on how to correct things rather than straight to the penalty and interest box. So that's, you know, they are going to allow a little bit of time for bedding in the scheme.
Yeah, excellent. So yeah, as we said earlier, now that we've gone through the reverse charge stuff and hopefully leave on a bit of a high note now that we've got the what HMRC are doing to out the way, and we'll talk about what you might be able to get back from HMRC. So research and development has been something in general that we've been really trying to spread the word about, especially for the last 2 to 3 years, really. I mean, before that as well, but we've really been pushing this last 2 to 3 years, sorry, because we feel it's something that's really beneficial for businesses in all industries, especially people in the construction industry, though, because quite often it's underutilized. So I mean, from what we found from us pushing it, we found it's been really beneficial for clients and non-clients coming to us to work with us to put a claim together, to put into HMRC to hopefully get them plenty of tax relief and tax credits from HMRC. So, like I said, the construction industry is continually seen really by the government to be underutilising the scheme in their eyes from what they would expect, because they put out figures at various points about their levels of claims that they would expect, and then potentially some splits between certain industries as well. Now, this could be down to a number of factors, but awareness of the criteria involved for a claim and what constitutes a qualifying research and development project does appear to be the biggest problem area, really. And that's from clients that we've spoken to, non-clients that we've spoken to, as well as what we've seen in the wider press as well. It seems to be more of an awareness issue. So doing things like this today are hopefully going to address that need, and obviously we'll keep kind of pushing the agenda on that front as well. So in terms of the claims themselves and what qualifies a claim, there's a multitude of areas really within the construction industry that could kind of constitute a relevant claim, and obviously there's areas within the supply chain as well. So maybe that you're within the construction industry supply chain, you supply the materials, you supply the labour, you can possibly supply anything within there, and it could be something that you're doing which is generating a qualifying project. So as a guide, any new process, new way of working with new or existing materials in a different way to the norm, utilising new technologies to make projects greener or more energy efficient, and many more things that could well qualify as research and development. Now, it's the latter of these, so the energy efficient types of projects, I'm just going to spend a little bit more time focusing in on now, just briefly. Because with the constantly evolving regulations, I'm sure you're all aware of, regarding emissions, energy efficiency, sustainability, the pressure is very much on firms in the construction industry and associated manufacturers, of course, to keep their products and projects in line with these regulations while still maintaining levels of output and ensuring, obviously, the deadlines for your clients and your customers are met. So quite often, in order to do all this and in order to meet the deadlines, still get the job out the door, companies in construction inherently having to experiment with new materials and techniques in order to operate at a consistently high level. So whether that's trialing new insulation materials or installation techniques in that particular area, for example, to improve a building's energy efficiency, or trialing a new material or way of working that is ultimately going to lead to a more environmentally friendly project or a more sustainable project. All these types of projects have great potential to be eligible for research and development tax reliefs, purely because working with these new materials, working with these new processes, it's innovative by nature, because quite often working with a new material, for example, that material might not have existed a year previous. So anything that you do in terms of application quite often will be research and development qualifying, because you're basically ticking all the boxes for a new innovation, because you're effectively you're the one on the front lines going through the trial and error process of, does this work for this application? Does this not work? Because obviously you're going to come across all different types of projects, and customers are going to come to you with all different types of requirements and obviously different specifications. So you're going to have to adapt obviously those materials and those ways of working sometimes. And it's in that adaptation and that innovation that research and development is really kind of key, really. So if a project can be shown to be using innovation at any point, then part or all of the project will very much qualify for these tax reliefs and credits, and it's well worth giving us a shout at that point to talk through them with you to help decipher the projects and what might qualify. Now, one thing that came in probably 5 or 6 years ago now is something called the Advanced Assurance Scheme. Now, what this is really useful for companies, especially in the construction sector, who might have an idea and think that it qualifies for research and development tax relief and credits, but are not 100% sure, and the project being viable or not would kind of hinge on the potential credits or the potential tax relief that could be gained from it. So what the Advanced Assurance Scheme does is it allows you to get clearance from HMRC for that project or projects, depending on what you're working on. So you would basically work with HMRC or work with us and HMRC and present the project to them as a whole, and HMRC would effectively give you the green light in advance of starting the project. So they would say, yeah, that's fine, that qualifies. So any costs in relation to that project for 3 years are all green lighted. So they're not going to raise any queries or raise any rejections or anything like that against that. So that's obviously great when having this tax relief or the tax credits could be the difference between that project or group of projects being viable or not. So having the confidence gained from the Advanced Assurance Scheme could obviously be a major boost to companies, like I say, especially in your area, where quite often the projects are embarking on a large project and could quite often take up quite a lot of you and your team's time in a particular year. So knowing that they're going to qualify for these really beneficial tax reliefs or tax credits could obviously be key to the decision-making process and whether you take them on or not. Now, in terms of us and how we work and how we try and price ourselves, what we try and do is we try to create an inclusive pricing model. So we basically charge on a percentage basis of any tax saved or tax credits we can get you back. The reason we do that is to try and take the risk away from you guys for any claim that we might make. So in the event that HMRC reject that claim for whatever reason or come back and reduce that claim for whatever reason, which like I say is unlikely, especially if we've been involved and kind of walked it through with you every step, then our fees would reduce accordingly. So if you ended up with nothing, we got nothing. So that's basically just trying to take the risk element away from making a claim. So if someone's on the fence and think we've got a qualifying project here, but we don't want to be racked with basically left with nothing at the end of it if the fees end up coming back to more than the saving, then again we try and take that out of it, because it could be that it's worthwhile going forward. It's wearing it with you effectively. And then, as like I said, the only risk of loss for you guys is potential bit of time in working with us. We will try and take as much as we can in hand ourselves and work with HMRC and work with you to get our claim together, use our knowledge and experience on previous claims, get that claim into HMRC and have it be successful for you, so you can benefit from obviously the generous reliefs and credits that are available. So if anyone did want to know any more, and anyone did want to, even if just have a different informal discussion or something that they think might be relevant, or want to know a bit more about the reliefs and about how beneficial they can be, then obviously my details are on screen now. Drop me an email, give me a ring. I'd be happy to have a chat and have a bit of a virtual catch up with anyone and go through it in a bit more detail. So yeah, thanks for your time. Thanks for listening to me ramble on.
Andrew, I think HMRC is something, or the government are definitely pushing research and development as a sort of relief that's totally underutilised. I think I'm correct. I mean, they're really.
Yeah, it's exactly what I said at the start. They still think, I think the latest figure said that of qualifying companies that they would expect to be utilising the research and development scheme, they still think utilisation is somewhere between 30 and 40% of qualifying companies. So what they're saying is, come on, put some more claims in, because the government and HMRC really do like claims, and obviously they don't want fake claims or ingenuine claims. But genuine claims to them mean that they can stand up in Parliament and say, look at how great our economy is, look at the innovators within our economy, come invest in Britain, what a fantastic innovative place, and look at all our great innovative businesses and what they're doing.
Yeah, and across the cases that you've done, you've looked after a whole range of sectors, haven't you? I think a lot of people think it's
like I say, we've worked in the construction sector, we've worked in obviously the online sector when it comes to digital marketing companies or e-commerce businesses. We've also worked with sports clubs, so obviously they've got medical and strength and conditioning departments, things like that, and they're constantly, especially at the elite level, looking to kind of forward those kind of sciences and technology. So that's what it's all about, really, scientific and technological advances. And obviously science and technology, that covers quite a breadth of industries, doesn't it? But like I said, especially when it comes to the construction industry, it's very much comes down to precision, doesn't it? You are in a very precise industry, and it has to be right, and there's often work that goes on behind the scenes to get it right before that first brick is laid, for example, or that first building goes up. So yeah.
Okay, thank you, Andrew, and thank you, Sean. If you are still here, thank you for joining us on the scene. Thank you for everyone who's joined us. We hope you found it useful and you've taken away some advice that you need to move forward. As always, we are here for any questions that you've got, and I'll keep the chat open as well. So if you've got any questions in the chat box, put them in there. We've finished a bit earlier than we planned. We planned to finish at 5 o'clock, so we've got a bit of time if you want to drop a chat in there. This is getting recorded and it will be uploaded to YouTube, our YouTube channel tomorrow. So anyone who's missed it, you can catch it on there, and you'll also be sent a recording of it tomorrow on an email. And I'll also send you this presentation as well, so you can use the links that are in there. In terms of our next webinar, the topic is to be confirmed, but keep an eye out on social media for more information to come on that. I'll stop sharing my screen now, but as I say, we'll stay on for a couple of minutes. If anyone's got any questions, and just drop them in the chat. If you haven't, not a problem.
okay.
Can I ask you a question, Andrew?
Yeah, of course you can.
It's probably a thick question, but I'm going to ask it anyway. I'm just thinking, so you might be a contractor and I might be, for argument's sake, a care home operator, and you're building a care home for me, and you do something very innovative. Who gets the benefit?
So if I'm building the care home for you, for example, so if you've contracted me to build the care home.
Yeah.
So what would happen there is, if you've given me the contract to the whole and you've said, right, build this care home, here's my specifications, here's my detail, here's my brief, make that happen, then me as the one who is having to do the research, me as the company, sorry, is having to do the research, having to do the legwork in terms of making that happen, I would be able to claim the relief there.
Okay.
The only time it would differ, I suppose, is if there was a specific research project, and let's say, for example, someone wanted to build a website and they knew exactly what feature they wanted, but they didn't know how to build it, and they didn't know how to get that feature into existence. If they sent off to a developer and said, develop this for us, do this, that, and the other, then that work would still, the relief would still stick with the person who's instructed the website developer, if that makes sense.
So it kind of really depends on the terms of the contract and whether or not in this case, the care home operator is happy for the contractor to benefit.
Yeah, effectively, it would depend on who. It always effectively depends on who has come up with the idea, and then who is kind of pushing that idea to fruition.
There's also, if I can just add my bit as well, it's also a case of building up your examples of what you're doing. So some of the claims can be built on around if you have, say, a person who really, as Andrew said, looks at research and development on certain projects. You can use that over the lifetime of over the year of the projects. So doesn't have to be project specific. As long as you've got a resource within the business, that can get added into the claim as well. That's correct, Andrew, isn't it?
Yeah. Well,
No, that's very interesting. Thank you.
all right, thanks, Jamie.
Jamie. We'll give it until 2:45, just in case anyone else has any questions. There's a few people left still.
I'm surprised no one's asked anything about reverse charge. I don't know. Hopefully everybody's on board with it and knows how it works since it was first meeting in 1st of October. Hopefully, the bits I've seen, the commentary I've seen is that a lot of it is open to interpretation. So I imagine there'll be some conversation with HMRC around grey areas of what it falls in or falls out. First 6 months, I think they're going to have a light touch. After that, and they'll probably be a bit harder and faster.
I think I might say 90% of the work really is identifying the customer and identifying the contracts involved, isn't it? Then the actual dealing with it is fairly straightforward, especially if you're on a Xero or a Sage or a QuickBooks. You just pop it in there and away you go. But yeah, actually identifying whether what VAT number or not, that's going to be
it's the end of the line. It's the end user really. That's the only element where the VAT should be accounted for, is when you're dealing with the end user. So it's identifying, making sure that whoever they're saying out the end user are in fact the end user. So that's the key. That's the skill to it.
Okay, we'll leave it there then. As we've said, if you've got any questions that you couldn't think of, or you've missed anything, then just feel free to get in touch with us. You've got our details. Helen has just said, I certainly wasn't aware, and for us as a company, my head's a bit blurred with all of the information. A lot of information to take in.
But if you've got a specific question, Helen, then you've got our details. Just get in touch. It is, as well as everything that's happening at the moment, it's just another layer of HMRC, whether it should have been deferred or not. I mean, that's a political question, but for me, they should have maybe left all alone until the rest of this is blown over. But I'm not as yet head of the government or HMRC.
Okay, as I say, everyone will get a copy of the recording tomorrow and also a copy of the presentation. So we'll leave it there. Hope everyone has a nice evening. Thank you for joining us.
Thanks a lot, everybody.
Thanks, everyone. Thanks,
Thank you.